There's also something on what I called it. Beginning of semester information. And this is going to be a little bit, and I know you guys are upper level, so this might be a little bit of a repetition here, but, and then we're going to start in on the chapter. One, two handouts. That's a nice little handout. Okay, so this will be our what we're going to do tonight, and we're going to continue the chapter 1 and 2 handout next week. Let's go ahead and jump into the syllabus, which hopefully everybody has. Oh, I know, if you don't have it, that's probably a better way to put it. If you don't have it, if you go into Blackboard under course documents, everything should be there for what we're doing this week anyways. So under course documents, if for whatever reason it doesn't go through your email, you know, that happens. Yeah, they're still available in course documents. Okay, let's go to. Okay, the syllabus. My information. These are just the important dates for the semester, and I'm going to drop and all that kind of. Hopefully, you guys won't run into that where you have to drop the class. But if you do, these are kind of the dates for it. This is one of the more important ones here, and that is. The textbook. The textbook, you can use any version of the textbook you want. You know, anyone you want. The and what I mean by that is EBook is fine. The if you get the hardcover or the well, they make paperback. They probably make loose leaf of it, or even if you get a PDF. Then someplace you can order PDFs of the book. But whatever format you have is fine. You do not need all the other materials for you know, for submitting. Work and all that kind of stuff. You can submit it any way, you know, you see fit, and we'll talk about that in a little bit here. But as far as the textbooks are concerned, and you know, you shop around obviously and find the best, you know, the lowest price. You don't have to get it through the bookstore. It's a good book, and if you're gonna hang around here for the graduate program, we also use the same book in 433, the practice of auditing. It's a really good book, by the way. The authors of this book are the same ones that write the CPA review for GLIME, the GLIME CPA review, the same people. And it's laid out very similar to what you'd see in the CPA review. Okay. University history objectives, blah, blah, blah. Course grades. The stuff that we do, the handouts that we do are together. Those are all worth 20% of your grade. And whatever we do on the videos gets turned in, basically. And those are worth 20% of your grade. The exams are worth 80%. So as mathy kind of people that us accounting people are, you can probably figure out that the exams are the most important thing to get in. You know, you can miss a handout or two and it's not going to hurt you, but if you miss an exam, you can. Okay, this is kind of a rough estimate of kind of what we're going to do in the class, but I think it's fairly reasonable anyway. The odd one is the one I started out with first here, and that is the audit sampling. And sampling is something we're going to do a few times during the quarter. we're probably not gonna get into it tonight, but next week we'll do something in sampling. We'll do sampling. I think there's 3 handouts we do in sampling. And then there's a sampling exam at the end of that. But the reason I put it up first there is it's not just done 1 week. And quite honestly, I kind of like to do the sampling and to kind of break up the class a little bit. That if you, you know, it can be a little tedious, some of this stuff. So it's nice to get to sampling and do a little bit with numbers. That I'm more comfortable with anyway. So tonight we're going to start in on this or so, and basically there's an exam after each one. These exams are smaller than most. And the reason for that is there's a couple of reasons for it. The first reason is that people generally do better when they're smaller exams, when you put in 1 or 2 chapters rather than 4 chapters or whatever, or a midterm. So the exams are shorter, and also people tend to retain more with the shorter exams. So more exams that are shorter, you generally retain more information doing it that way. So that's one of the reasons why we do it. And these are the exams. There are no other exams. There's no midterm, final, anything like that. It's just the exams for the chapters. And that's pretty much it. Any questions on that?
I have a question.
Mm-hmm.
Is there an ebook for this class, or is just a textbook as the only option?
You can't get the ebook. You can get the ebook. You can get it either through the school, or you can also go through McGraw-Hill. I think if you go through McGraw-Hill, I think it's a little cheaper. I'm not positive on that. It usually is, but anyway, yes, there is an ebook. If you want to get the ebook, and you'll get something that looks like this. What I don't have a student email account. So I don't want me to do this. Let me get back into mine. I mean, I was in a student preview. It's not like, hey, I'm not sharing. That was pretty rude of me. Well, I didn't share yet. Yeah, but so this is the and you know, if you get it, you'll sign in. Yeah, so there is an ebook available.
Okay.
Yeah.
Do you have a preference, or it really doesn't matter?
It doesn't matter to me a bit.
Okay.
And we will do some of the problems in the book. It's a very well done book. It is my favorite. Not that I have a lot of auditing books that are my favorite, but this is a good one. So yeah, it's Blackboard. So yeah, you can do the ebook. Again, you know, any form that you want to do it in is fine with me. And again, just so you have the problems in that we work on in here, there's gonna be some chapter in each chapter. There's gonna be at least a couple assignments that we do. They're mostly essay type, and there's also the statistics stuff. And this book is very well done. It's done very similar to what you see on the CPA exam, which virtually none of the other books are like, for whatever reason. So
Thank you.
So yeah, and again, it doesn't matter to me either way. All right, as far as the class is concerned, let's pull up one more thing here. And this is where we're beginning of the quarter stuff, and this is going to be, I know that you guys are upper level, so this probably is old stuff for you. But in case somebody transferred in or something, this would be a good, maybe a good movie. Your Roosevelt email account. This is the URL. It's also available in, I got it in Blackboard, not there, not there. In Blackboard, if you click on Roosevelt email link, This has your email link. You can go to sign into your email. It also has Microsoft Word, Excel, PowerPoint, tech support, which we'll talk about in a minute. And so these should open up in new windows. You don't have to right click on these. Just for kicks, let me do it and see if it comes up. Yeah. So you can access your, I just got that just for convenience. I just put that in. That's not, oh, there we go. All right. So that's in Blackboard. If you click on email link, it's also in the announcements, but in the announcements, you got to right click on it or else it'll kick you out of the window. Oh, I know what I want to show you guys. I'll right click on it. Open a new tab. There's also not just the normal, Microsoft Word and Excel and all that kind of stuff. If you click on this little, I don't know what they call it up here in the corner. If you click on this, there's actually a whole bunch of stuff in here that's beyond what, if you want to see all the apps, I mean, there's tons of them. So you guys all have access to that. It's included in your tuition. So you can get to that. So I put this in the announcements just because the announcements come up underneath the when you're looking at your classes. But also in Blackboard itself, there's links that if you click on it, it'll come up. So here's Word. If you're going to upload a document, it's down here a little bit. This is the the browser-based one. But so everybody has that. Okay. Yeah, I'm not sure. I don't know what you call that little grid thing. The little grid thing in the left-hand corner. We'll click and you get all your apps through there, through the Microsoft Office 365. Now, if you can't get into your Blackboard or email account, you need to contact technology support and submit a ticket. So, don't assume that it's going to, don't assume that it's going to correct itself, because it usually doesn't. So if you have a problem with Blackboard, whatever it is, or your email account, don't just let it sit there. Make a ticket out, and they're pretty responsive. I had a problem with mine. My email account was deleting everything, which is kind of odd. You go, especially from my boss, the dean. For whatever reason, his email would always be deleted, and they worked with me, and we got worked around it. So anyway, if you are having a problem with your email account, whatever it is, or Blackboard, fill out a ticket and give it to them. And like I say, usually, 1 day or something like that, 2 days maybe, it gets worked out. So make sure you do that if you're having problems with it. Okay. So class documents except exams are emailed and are in Blackboard. So you can get the class document, whatever it is, are in Blackboard. They're also emailed to you. In the class documents tab. Another thing, this is kind of important, or can be. Space in here. For course documents except exams, you can resubmit them anytime during the semester for a higher grade. So if you turn in a handout and it's 80% complete, you get an 80 on it. You can finish it, resubmit it, and get the higher grade. So you can always resubmit anything that's not, except for exams. You can resubmit if you want. Another thing is that you can, even though there's due dates, the due date, you can turn in any assignment all the way up to the end of the semester. So even though the due date, might be, I usually set it for the following Friday is usually due date after we do something in the video. So, but if you don't turn it in by then, don't think that, gee, I lost all those points. You didn't. You can still turn it in. The only thing that'll happen is when you look at your grade to date, it'll look bad because there'll be a 0 in for that. So after that due date, whatever is supposed to be there will be included in your grade calculation. All right. So if you're supposed to get a test in by that due date and you don't, it's going to look bad in your grade to date. Now you can still turn the test in and get full credit for it. You can't, if it's a test, you can't turn it in twice, but you can still turn it in. So don't think that because it's past the due date, you can't turn it in. You can, but after that due date, it'll be in your grade to date. So, until you do turn it in, your grade to date is going to look bad. But, and I encourage you to kind of keep up. It's usually easier, just reducing stress and so forth to keep up with it. But generally speaking, when something is assigned, I assign it for the following week by Friday. So for instance, well, let's take a look. So for instance, in Blackboard, we go to assignment due dates and submit documents. For instance, there's going to be a quiz on what we're talking about right now, and it's due by Friday the 28th, which is next week, Friday. So assignments and due dates are in Blackboard. Okay. The Zoom meetings cover the Zoom documents in the course, and they're recorded to help you go through the handouts. You can do the handouts on your own. There's nothing wrong with doing the handouts on your own. It's usually just easier and quicker to do them in the Zoom meetings. And all the Zoom meetings are recorded. It does take a little longer for them to, it takes about I put 24 hours here. It usually doesn't take that long, but it usually takes maybe, I don't know, at least 6 hours for it to get up and running. So because what happens is the Zoom meeting ends, the Zoom meeting renders, what we call rendering of the video, and then I edit it because you have to take out the basically the beginning of it. It's silent because if you don't do that, it won't close caption. It's a long story short. Anyway, it has to render twice and then submitting it into YouTube. And on YouTube, it takes a little longer because they have to check for copyright and all that kind of stuff. So long story short, probably the fastest it gets in there is maybe, I don't know, 5 hours or 4 hours or something like that. But there's a little bit of a delay, but still, it'll be there by the next day, certainly. And so if you don't come to class, you don't have to send a note or anything like that. Just know that it's going to be there, and it'll be in there. It'll be where the Zoom meetings are in the here. Now there's no recorded Zoom meetings because this is the first one. There will be tomorrow. The recorded Zoom meetings will be underneath here, so you'll have, eventually there'll be 15 Zoom meetings underneath, recorded Zoom meetings underneath here. Okay. Exams are emailed only, and there's a reason for that. And the reason is there's different forms of the exam. So the exams are going to be emailed only through the Roosevelt email account. And make sure you turn in the exam to your email, obviously. But they will not be in your personal email account. They'll only be through the Roosevelt email account. And now, again, if you're having problems with the Roosevelt email account, make sure you contact somebody about it. Okay, this is important. The exams are not available in Blackboard. They're only emailed. And the reason for that is that, student A, make it, student number 1 will get form A, student number 2 will get form B, and whatever. People will have different forms. So, you're gonna get emailed the form of the exam that pertains just to you. And, the other exams, I don't want to put the exams into Blackboard and then people basically turning in the wrong exams. So anyway, whatever exam is emailed to you, that's the exam that you turn in. And again, usually you have about a week and a half, 10 days, something like that, to turn it in. Okay. Exams cannot be resubmitted for a higher grade, so make sure that you're doing your exam, that you do it to the best of your ability and that sort of thing. And again, you'll have time to work it out. All exams are part of the grade for the course. The lowest grade is not dropped. So all exams need to be turned in. Okay, you guys probably already know most of the stuff that I'm going to cover in this, but turning in homework and exams. We already talked about the homework due. You can submit, I'll basically take any form of the exam that you want to. So if you want to scan it, you want to work right in the Word file, that's what probably most people do. You can take pictures of it. You can print out the handout and take pictures of the handout, or just do it in a notebook and take pictures of that. I'll take any form of it that is easiest for you to work on. So any form of that will come in. And by the way, the pictures, there's unlimited submittals. So you can turn in 10 pictures. There's nothing wrong with that. So if a handout has 10 pages and you take 10 pictures, that's fine. Okay, this is an important one here. Generally speaking, the file must be closed before it is submitted. It's a good idea just to close the app. So if you're working on a Word document, when you submit it, make sure you close that document before you submit it. And you're wondering why, maybe. The reason why is in Blackboard, it shows as a pending document. No, this isn't my doing, this is Blackboard. So it'll show as a pending document, which means that it's like if you're working on something and you're submitting it as you go. The problem with that is if you submit it when it's not closed, that pending remains for the entire time until you get out of the document and then submit it again. And you might say, well, can't you reset it? Actually, no. Instructors cannot reset those because it's as if a student is turning in a test and you're trying to delete it while they're turning it in. So just know that. So if you do have something that doesn't look like it's being submitted, and I've had students that say, look, I got it right here in front of me and I can't submit it. And you say, well, if you just close it, then try submitting it, and that generally works. Again, it's a quirk of Blackboard, and I wish it wasn't like that, but that's the way it is. So just make sure you close it. This one is also important. Blackboard cannot convert zip files. That's a Windows format, or pages file. That's an Apple one. It's when they take a number of files and put them together, like for pictures and that sort of thing. They should be converted to PDF files, or simply submit them as individual pictures. Oh, yeah, again, so your chat. Exams are emailed to you. You submit them through Blackboard. Yes. Yep. So, and when you submit these, again, Blackboard can't convert those. So if you're, I know that Apple can convert those into PDF files pretty easily. But if you're in Windows or something like that, if you have 5 pictures, you're right, it is more convenient to zip them, but Blackboard doesn't like it. So just go ahead and submit 5 pictures or whatever it is. Okay. We talked about this late exam, has an exam receipt without penalty. Oh, are there? Okay, blah, blah, blah. I already did that. Okay, here's our quiz. All students have access to Microsoft Office. Yes or no?
Yes.
Yes, yes. If the student has a problem with logging into Blackboard, the student should
C.
submit a ticket. And again, I have that in, those are in the Blackboard thing, they're also in the announcements. They're also on the website, so. 3 is same. So if you're having a problem, oops, give me a second here. If you're having a problem with either your email or Blackboard, make sure you submit a ticket. And again, they're pretty good about it. And you know, and that'll help you not just in this class, but in the other classes too. Okay, course documents, except exams, are available to students via
V.
the actual course documents, except exams, are going to be in email and in Blackboard under the course files. Now, the exams are only going to be, like you said, hold on. So the exams are. It's fun watching me learn how to use a computer. So exams are going to be in Roosevelt email. So course documents are in email and Blackboard. The exams are going to be in email only. And yeah, they all get submitted in Blackboard. So exams and other course documents may be submitted for grading via Blackboard only. So if you have a document. Why is it AI? Okay. Yeah, this should be used in chat. Yeah. You know, I also have polls here. I should have used the poll. That may have been a better one to use. Okay. And which of the following are not acceptable? Close. And again, this is not by doing. This is the way it's worked out in Blackboard. So Apple Pages or Windows zip files that can't handle them. And that's not just this class, other class. If you have a problem with other class, you know, check and make sure that it's the same thing. And this is the one that happens quite frequently is this. Just leave it, but make sure you close the document. And you know, students will again, I'll say, you know, it's stuck, and is that you like try closing the document. It's really not so much, usually not on computers, but especially if you're using a tablet or a phone, sometimes it's hard to know what's open. So look up whatever program you're working it in, and make sure you close it before you send it in. All right. Okay, usually the way the classes go, we go for about an hour, take a break, 5-10 minutes, and then come back and do maybe another hour of it. And that's what we're gonna kind of start in on today. So let's take a look here. Let me get rid of. 1 second. Okay, so let's pull up the chapter 1 handout. And by the way, you'll see that, and I think I'm probably gonna keep doing this. At least this is with the ebook. It might be a little bit different with the other versions of the book, but I've been putting the page numbers in there. So just in case you're wondering like where in the book that would be, so if you have the document, you can at least look it up in the book and see what, what information it is. There's gonna be some other stuff that maybe tangential to that, and hopefully, as we go through it, it'll make more sense. But so this is kind of, you'll see that it's for most of the stuff like this. You can print this out, or you can just do it right into the document. This is probably what most people do, is just type it right into the document. Okay, so let me go through this. The IBM Financial Statements and Audit. So we have to pull this up. So do me a favor, and there should be when it says IBM Financial Statements. It kind of looks like this. So these are IBM's financial statements for the last, well, this is the December 2020. And yeah, this will be the, did I put the wrong date in here? I may have put the wrong, may have matched these up with the wrong audit report. But anyway, so these are the financial statements that a company puts out. And you guys have seen these before. There's the income statement. I'm sure you remember that. Consolidated statement of comprehensive income. If you have advanced accounting, you may have gone a little bit into that. Balance sheet, right? Current assets, total assets. Oops. Statement of cash flows, you guys have probably seen that already, I'm sure. And this is the wacky one. This is the consolidated statement of equity. You may have had this as a statement of retained earnings. Smaller companies will have a statement of retained earnings instead of this usually. But this is kind of a comprehensive thing here. Now, here's the problem with this. So these are all the financial statements. Notice there's something odd here, and that is IBM is sending this out to the shareholders, the owners. The owners don't have access to go into the, you can't just walk, if you have IBM stock, you can't just walk into IBM and say, let's take a look and see how you guys are doing. Which is what corporations are basically really built around, is that anyone can invest in it. I mean, the great thing about buying stock is you can, even if you don't know anything about, say, computers, you can buy tech stocks. You may not know anything about making cars, but you can buy auto stocks. You can buy, so you can actually invest in those things even if you don't have any expertise in it. Now, they send out these financial statements, though, to tell people how well they're doing. Notice that there could be a conflict of interest there, right? Management wants to make themselves look good. I mean, that's just natural. And even moreover, they probably get bonuses and so forth if they do well. And they make the financial statements. So IBM, their management, makes the financial statements. Now, you say, okay, well, that seems kind of odd that, here the owners are getting, wondering how their business is doing, and the people that are running the business are the ones that are telling them how well they did. So how do you rectify that? How do you, what do you do to make sure that these financial statements that they sent out, how do we know that their net income is, these are millions? So their income from 2020 was 5.59 billion. How do you know that? How do you know that this isn't just a made up number? Any of these numbers. So, the question is, how do you know this? How do you know that they have 13 billion in cash? Right. It's important to you as an owner to know these things, but there's also this kind of conflict thing. Well, how do you know that these are actually what they say to be? And this is where the audit report comes in. And so if you click on audit report, and this is the most involved audit report you probably see. I probably shouldn't have picked IBM. IBM's a pretty involved company. Probably hard to find something, business that's not intertwined with IBM somehow. But this is an audit report by independent public accounting firms. So this is what CPA firms do. They explain a little bit what an audit is, but here is the opinion. And when you pass the CPA exam and get licensed, this is what you're getting licensed to do. Write this opinion. So the CPA exam is focused on writing that opinion. It's a license to do it. Other people cannot do it, just like doctors, lawyers, and all that kind of stuff. Now, I can't practice medicine. I don't have a medical license. By the same token, a doctor can't write an audit opinion. Doesn't have a license to do it. So the license allows you to write an audit opinion, and that is basically all a CPA license allows you to do, is to do audits. Now, if you're wondering why, in this course, we're going to focus a lot on the CPA exam, for a couple of reasons. But one of the reasons why is because that is the license for auditing. The license for auditing is a CPA license. You can go do audits. And the other designations are not licenses. I do my other ones, like, for instance, I'm a CMA and a CIA and a CFM and all that. Those are not actual licenses. The CPA is an actual license by the state. It's like a driver's license. And you go into the state, you take the test and you take the driving test, and they give you a license. It's the same thing. It's licensed by the state. So that's what CPA firms are, and that's what they do, is they attach this to the report so that people know that somebody else has looked at those. So I can't go in, I own IBM stock, but I can't go in and take a look at their books. But somebody else has done this for us, the CPA firm. So when you're talking about CPA firms, that's what they do. And they'll give this opinion. And you'll notice something about this. One of the things is the people that it is not always clear is that an audit report is an opinion. It is not a statement of fact. Right. For instance, in my opinion, the best color is blue. That's my opinion. Now, it's a little bit more informed opinion when you're talking about doing an audits, but at the same time, it is an opinion, which means it's judgment. Just like I didn't say just like that, but it's like blue is the best color is, you know, my judgment of it, whatever. But the an opinion is judgment, and all of auditing is judgment, which is why it's difficult. It's difficult to learn judgment, and but that's basically what you do when you do auditing, is learning judgment. One other thing here, you look at this. This is the audit report, and I've kind of highlighted a few things here. They talk about being in all material respects. Okay, so all material, so, you know, are they looking for all errors? All, you know, all the errors or all the misstatements? No. Only those things that are material. So for example, let's go to, I just pulled this up for, I don't know why I put this in here, but if you look on that consolidated statement of equity, it's the last of these. You'll notice something, there's a change in other equity that is $5 million. Okay. So there's their total equity. This changes in equity is $5 million. So 5 million. The total equity is 20 billion. The changes in other equity, is it material? Would it make a difference to anyone investing? If it was off by $5 million, a $20 billion account, and it's off by $5 million. What do you think? The material? So here's the here's a total for the account, 20 billion. And here's a change in equity, 5. If they were to eliminate this, would it be material? What do you think?
Should it follow a percentage? Or
Yeah,
no?
it's an incredibly small percentage. So this probably isn't material. If they would have left this off completely, if they would have eliminated this whole row, it wouldn't have mattered. It wouldn't have balanced, but a little problem there. But if they would have, for whatever reason, not put that in there, it wouldn't have balanced. The auditors probably wouldn't have done anything about it because it's not going to make any difference. It's not material. There's no way that this, you know, the difference between 20,597 million, 20,597 million, $5 million, a lot of money, but not compared to this.
Okay.
So, you know, it's one of those, materiality is one of those things that can be a little bit tricky, and that, especially when you talk about big companies, you know, very large amounts fall into that materiality thing. And so, you know, again, you know, I'm not just on IBM, but, you know, you look at Walmart, anything like that, and then them being off by 5 million, 10 million, 20 million probably isn't material. And here's the thing, this is where the public generally doesn't understand what we do as auditors, is that they think, oh, the auditors will find, you know, anytime someone committed, you know, sometimes you'll see this, you know, someone was stealing $50,000 from Walmart for the last 10 years and the auditors never caught it. The auditors never looked for it. There's no way they looked for it. And it probably would have cost a lot more than $50,000 to even find it. So when you talk about doing audits of large companies, especially, you're talking about really big numbers and then materiality. Now, a small company, you know, $50,000 might be huge in a small company, But again, you know, and they should find it if they're doing an audit of a small company. But again, you talk about these large companies, unless it's something really big, it generally isn't going to make any difference. Okay, so let's take a look. For some reason my computer is hesitating. I click on it. Okay. This is, we talk about material misstatement, but there's also this idea here, basic opinion. One of the things we always talk about is reasonable assurance. So we do not give absolute assurance. It's reasonable. We do testing. We test things to see if they are, on a test basis. Yeah, here, test basis. We don't look at everything. And you may say, well, why is that? Well, part of the reason is because statistically, you can get a fairly comfortable with numbers by taking a sample. For instance, they may have 300,000 accounts receivable. If you take 1,000 of them, you probably have a pretty accurate picture of the accounts receivable. Probably 95 to 99% confidence in that number. So you can actually get very comfortable with the numbers by taking a much smaller sample than the entire population. And for some things, it would be impossible to take the entire population. For instance, Walmart inventory. If you want to do an inventory of Walmart at the end of the year, there's not enough auditors in the world to do that. To audit all their inventory and all their stores and all their warehouses and all their, on the boats and the planes and everything else. It's impossible to do that. You have to do it statistically. So sometimes it's impossible to do, to do 100%, but generally speaking, not just that, it's more efficient to do it as a sampling. So we give reasonable assurance. We don't give absolute assurance. Reasonable assurance about whether it's free of material mistake, only material misstatements. If it's off by something immaterial, we don't care. Well, I know we don't care. We're not going to have bad attitudes, but I mean, we're not going to. It's not going to cause us to change our report. Okay, so let's take a look here. So this is actually a very involved one. They usually aren't this big, but then coming down here, they sign the report, and this is when you pass your CPA exam. This is, and get a license. This is what you get to do: sign off on an audit report. Now, passing the CPA exam opens other doors too. You may not want to be in auditing, but passing the CPA exam will open a lot of doors. And, getting a license, even though you're not. For instance, I don't do auditing, but you do other things, and it opens doors for that. So even if you're not considering doing auditing, you may still want to get the CPA exam just because it's it's like a stamp of approval. You do it, but it really is a very narrow license. It's only for doing audits, and the audits themselves are only for material misstatements, reasonable assurance, not absolute assurance, and it's an opinion, which tells you that there's going to be judgment. There's going to be some kind of judgment in there that, yeah, I feel like this is, I feel very comfortable saying that these financial statements are not materially misstated. Okay. So let's see where we're at here. All right. So way back when we were talking about the handout, we'll do this first one. Then I think maybe we'll take a break here. So the demand for audits. Let's just go to the multiple question here. Which one of these things? We do the independent audit. What do independent auditors provide to the financial statements? I'm sorry, my camera's in the way. Which one of those is probably it? what do we give to the financial statements that wasn't there before, when they just had the, you guys can't see what I'm doing. Apologize here. I'm double clicking on it, but it's not always taking. I'll have to be careful. Okay, so this is for chapter 1, the first one, A, demand for audits. Which one of these is probably, what do we actually give to the financial statements that wouldn't be there if, you know, if we didn't put the audit report on there? Oh, come on, take a guess. You can do it in chat. You can probably do it in chat if you want. We're all friends here.
Would it be D?
Yes, excellent. What auditors give, the audit report gives financial statements is credibility. And so that people can look at those financial statements and say, okay, this is credible because somebody else has looked at it and they are independent. They're not part of IBM. And they've looked at it and they are reasonably, give reasonable assurance about whether they're free of material misstatements, that they, in their opinion, that these are financial statements can be relied upon. And this credibility is something that is very, very, very important to auditors, because, and whenever we go through this, it's one of those things you always have to think about. You know, you have to think about the clients, for instance, that you take. This is different from being a lawyer. A lawyer can take any client, you know, they want. Accountants, because you lend credibility, you cannot be associated with people of ill repute. Why? Because you're trying to give credibility to these financial statements. So it's different than other professions in that, because we lend credibility to the financial statements, there's a whole bunch of rules and that we have to follow to make sure that what we do is lend credibility to the financial statements, because that's the whole purpose of us being there, is to make those financial statements believable, and so people can make accurate assessments, you know, of what how the company's doing. I'm gonna make sure. I think I know what it is. There's a pop-up that happens when I, one of these apps when you do this. Okay, let's go ahead and take a break and be back at, let's see, what time is it? 3:57. How about we be back at say 7:05? And then we'll start in some of this other stuff, and also we'll kind of go through turning in the little quiz thing, well, whatever it was, beginning of semester information thing. We'll get that turned in if you have it done already. Anyways, we'll get that turned in. Okay. Oops, wrong thing. Oops, double wrong thing. There we go. Oops, there I go. Now I'm not, I'm unmuted. I'm a little earlier. Okay, you know what it is. It's this Excel sheet keeps popping up whenever I. Okay, so we go into the risks of when you're really close with the company, what kind of risks they have. And business risk is the risk. Oops. So business risk is a risk that a client will go bankrupt. So for instance, we're auditing IBM, the risk that IBM will go bankrupt. That is business risk. They're in business, and part of that is a risk that they will not continue on. Information risk. This is an undetected material. Oops. This statement will appear okay, so business risk the place to go bankrupt. Information risk is a risk that a material misstatement, an undetected material misstatement, so one that you don't know about, shows up on the financial statements. Right, that's the information risk. So the information is bad that they're getting, that the public's getting. Okay. Which are we going to be more concerned about when it comes to auditing? These last two I just threw in there. It's not C or D. Which one of these two are we probably more concerned about as auditors? A or B?
A.
Actually, we're more concerned about B. And here's why. Let's see here. Jesus, hold on, give me 1 second. Okay. Information risk. When we put out this report, all we're saying is that the financial statements are, we're saying that they're free of material misstatement. We are not saying that IBM is a good investment. So, that's a big distinction in our, and that's one of the what they call an expectation gap. There's some people that think that if they get a clean audit, that means, oh, they're a good investment. It depends on the stock price and so on. Excuse me, IBM might be a terrible investment, even though.
Go B.
Yeah. Yep. So it'll be B. Yeah. So the information risk is the one that we're really looking about. And the it's to such an extent that as an auditor, you are not allowed to make an opinion on whether the company is a good investment or not. You cannot be an advocate for the company and be an auditor.
Déjalo, pisaste, lo está regañando.
So if you have a, you know, if someone asks you, you know, you did the audit on IBM, are they a good investment? You can't say anything because you're not supposed to be an advocate for them. You're not supposed to be a rooter for them. You're supposed to be independent, objective, and only make sure that the information is correct. Someone else can look at the information and make that determination. Another thing is, let's say a company is doing poorly. If a company's not doing very well, can they still make their financial statements correctly?
Yes.
Yeah, I mean, they're not going to look very good, but they can definitely make their financial statements correctly, even if they're doing poorly. So, and remember, we're only looking at the financial statements. We only are trying to give credibility to those financial statements. Sometimes you'll see in the, you know, someone will write up something that, you know, this company went bankrupt, you know, 5 months after getting a clean audit report, this company went bankrupt. It has nothing to do with that. All a clean audit report says they made their financial statements correctly and are free of material misstatement, basically. So it is not saying that they are a good investment. It's not saying that they're not going to go bankrupt. All an audit report says is that the financial statements are free of material misstatement. That's the only assurance that we give. It's a reasonable assurance that they are free of that. So there is kind of a gap between people thinking that a clean audit report means, hey, this company's doing well. That's not what it is. It's somebody's saying the financial statements. Someone can use those financial statements to make that determination. Okay. All right. Any questions on that? But this is a big distinction in auditing that, and we call it the expectation gap. People expect a clean audit report to mean, hey, take your life savings and invest it in this place, which is not what it says. It says, here's a financial statement. You can rely on those to make your own decision about, you know, whether to invest in that or not. Okay, a lot of the stuff's kind of, you know, you guys have already had. Board of directors, these are people that are basically oversee the company. And this is what they call corporate governance. This is the kind of the key word they use now is governance. So the board of directors, board of directors they oversee a company's management. They can have, you know, it can be a couple people or it could be dozens. But the board of directors they oversee the company. And the audit committee is a subset of the board of directors. So it is a subset of the board of directors. So let me do this. Should I throw something on the floor? Okay, so you have this board of directors. So let's say that you have, you know, these are all the people on the board of directors. You may very well have the an audit committee that is a subset of, now, the audit committee is still part of the board of directors. You know, this is, but the audit committee will be something that is, that doesn't have all of the directors in, it, you know, some of them will be in there, but it is part of the board of directors will be that, that audit committee. And the audit committee does all the interaction usually with the auditors. Board of directors are generally on the outside of the business. And so it makes sense for them to work with the auditors. And you'll notice that when we do this, let me make this thing bigger. When we do our audit report, and you can't see what I'm doing again, I apologize. When you look at this audit report, you'll notice that it's sent to the board of directors and the stockholders. Now, these are the people that are sent this audit report. You notice it's not to management. Why? Management made the financial statements. Management should already know what the financial statements are. But the board of directors and stockholders, these are people outside the company. And that's who this audit report is sent to, on the outside. So if you're wondering, like, why is the board of directors, you know, working with the auditors? Well, that's because they're basically on the outside too. Okay. Okay, so yeah, the audit committee, these are usually the people that are, they interact with the auditors about the audit. Okay, types of audits. A financial audit. This is what we do for what CPAs do. Sometimes called an examination. Same thing. These are for the external auditors. For people that are kind of what we just talked about. When IBM puts out their financial statements, I put numbers or something by these. Okay, second type of audit you run into is a, well, let's do compliance. I can't remember in the book which one they do next. Maybe a compliance one. It's either compliance or operational. Compliance audit. This is, are you complying with some set of rules? An example. IRS audit. An IRS audit is just basically, did you do your tax return according to the IRS rules? It does not necessarily, it's not necessarily a bad thing. I had a friend that got an IRS audit, and he got $800 back. He did something wrong, and they found that, he got $800 back after they did the audit. But it's basically saying, did you do your tax return according to the rules? So an IRS audit is a compliance one. You comply with the rules. It could be for other things. It could be for grants. It could be for whatever other criteria that they have. Are you complying with it? All right. 3. Operational audits. Operational audits are made for improvements. They are future oriented. In other words, they're looking to, you know, how can we do this better? You know, whatever it is, we're making these things, and we want to do it more efficiently or whatever. You know, in the future, how do we do it better? And they also, the keywords that you'll have here are efficiency and effectiveness. So these are all kind of keywords that you'll see for operational audits. We're trying to make things either more effective or more efficient. And again, notice that the financial audit is sort of like historical. It's for what happened in the past, what happened in 2020, right? Whereas operational audits say, okay, we're going to see how we can make improvements going into the future. They're future oriented, you know, whatever happened in the past, whatever. Going into the future, this is how, you know, how do we make, you know, for manufacturing these, how do we make it more efficient that we manufacture these, or how is it more effective our marketing of these, or whatever it is. We're trying to make improvements going into the future. So that this is it's sort of like consulting. An operational audit is similar to consulting. You know, that you're trying to make improvements going into the future. And this last one, I don't, I don't like. It's called an integrated audit. This is I don't like it. It's just that it's basically when you do two audits at the same time. My problem with it is it's really not an audit type. You know, I mean, yeah, an integrated audit is something that exists. You know, that you can have more than one thing you're auditing at the same time, but the audits themselves are not, you know, it's usually some combination of these up here done together. For instance, I was an internal auditor. I worked inside a company. We'll talk about these later. But as an internal auditor, when you go to, say, I worked for U.S. Steel and for Navistar, and you go to assembly plant, one of the things you want to make sure is that their financials coming out of the assembly plant are correct, right? But you're also kind of looking at these, saying, okay, how can we make this better? How can we make this plant better, more efficient, more effective, or whatever? So that would be an integrated audit. You'd have two audits that are going at the same time. In financial accounting, they have a financial audit, sometimes an audit of internal control for publicly traded companies. And that's kind of what they talk about in the book. But it's basically when you do two audits at the same time, the idea being that a lot of times the information, you'd be using the same information for both audits. It's a little bit more, it's more efficient to do two audits, you know, the two audits simultaneously. Okay. So we got our 4 types of audits, and I probably shouldn't have named them 1 through 4, but I did. So 3 and let's go 3 first. The Happy Bakery wants to improve production. Which of the following audits would be appropriate for this task? Which kind of audit are they going to use?
Operational.
Yep. Yeah, they're going to do an operational audit. They're going to make, you know, it isn't saying how much money did we make last year or anything like that. It's saying, okay, we want going into the future, right? We want to improve the way we do things. That'd be an operational audit. Again, it's very similar to consulting. City of Chicago needs assurance that the grant money for homeless residents is being spent properly. Which of the following audits would be appropriate for this task?
Financial.
Could be partly, probably mostly going to be though a compliance audit. You know, are they actually spending the money to help, you know, homeless residents, you know, whatever the goal is of it. And a lot of times you'll find that with things like grants. Being at the university, for instance, universities a lot of times get grants to do different things, whatever it is. And then let people come in and audit it. They'll say, okay, we gave you this money. Let's see what you did with it. You know, what'd you do with it? Oh, bought a couple Ferraris. Oh, no, that's not what you're supposed to do. So, you know. So a compliance audit is basically saying, you know, there's usually some criteria that they, kind of like in the IRS, you know, they up against the IRS code, you compare what the tax return was, similar to it. Okay. Now, it could be that there's a financial aspect to it of where did the money actually go, and does that show up in their financial statements? But it's to see if they comply with whatever the grant is. Okay, types of auditors. Oops. General auditors are kind of what we've been talking about. CPAs. Oops. By the way, here's one thing that's kind of odd. And that is, you think of CPAs, because we're only licensed to do audits, you think it'd be called the certified public auditors. They call us certified public accountants. Kind of weird, you know, that, you know, we actually don't actually do the accounting. You know, that's not the license gives us. It's for the auditing, but whatever. Okay, so external auditors, certified public accountants, they're people outside a company that come in. Internal auditors. These are auditors that are inside a company. For instance, IBM might, not might, they absolutely have internal auditors. So internal auditors are auditors that they're actually inside the company. That's what I was. I was working as an internal auditor for US Steel. I told you, US Steel and Navistar. A company has, you know, they have people inside to say, okay, let's go check on this operation and see how they're doing. You know, how's that sales office doing in Dubuque, Iowa? They'll send auditors down. They won't. The external auditors probably don't care. It's probably not material. The Dubuque, Iowa office isn't material, probably. They probably don't send auditors down to Dubuque, Iowa. But inside the company, it's a absolutely valid thing to say, okay, well, let's see how this operation is doing. You know, how are they doing? And internal auditors a lot of times will do basically all of these. You know, you'll see how the financial statements are. You'll see if they're complying with IRS codes and all that kind of stuff. You'll try to make improvements on it. You'll do all of them. Internal auditors actually do quite a bit. It's more varied than external auditors. External auditors is usually fairly, you know, it's only looking at the financial statements and not to make improvements, not to do, you know, other things. Okay. So external auditors, IRS auditors. You probably know what those are. Oops. And governmental auditors. And the big one there is they call the GAO. It used to be called General Accounting Office. I'm not sure what it means. I think they changed it now. And these are auditors that work for Congress. So governmental auditors, and they kind of go by their own rules. And what I mean by that is that, well, for example, there's only one Pentagon. So they probably have rules for military spending and, the Pentagon. There's no reason for any other auditors to know anything about that. They're not going to audit a Pentagon anywhere. So, they're very, again, they make their own rules. I don't mean it like they're just winging it. I mean that they have their own things that are important to them, and they'll look at programs, whatever program, aircraft programs and submarine programs and all that kind of stuff. And they basically work for Congress. Sometimes people in Congress will get mad at them because they'll look at a program and say, "Oh, this was a big waste of money," but they're making submarines somewhere, and they say it's a waste. And then people who, senator from that state gets all mad at them. But they're basically governmental auditors. Mostly the type of auditors you're going to see, though. Okay. American Institute of Public Accounts. Okay. The AICPA, which they usually are called, the AICPA is a club that consists of CPAs. It is not a government agency. So it's this club. When you pass the CPA exam and get your license, you will get an invite from the AICPA saying, "Do you want to join our club?" And you can say yes or no. Some people say yes, some people say no. But the AICPA is a club consisting of CPAs. Now, it's like the Boy Scouts, except that they generally have a little bit more influence. Actually, not a little bit. They have a tremendous amount of influence over all aspects of accounting. They are the most influential group, the most influential accounting group in the United States. Okay, the Accounting Auditing Standards Board. This is part of the AICPA. They make the AICPA. The AICPA board that makes rules for auditors. Okay, now think about this for a moment. So this is just a club. It's like the Boy Scouts. So they make rules for auditors. So think about, like, if the Boy Scouts made rules, do you have to follow? No. So, well, who cares? They make rules. You care because of this. A lot of times those rules the AICPA makes become state laws. So a lot of times their rules will be state laws. the states will say, hey, that's a good rule, and we'll make that into a law in our state. So a lot of times it's that way. Also, at the high level for registered CPAs, audit for government publicly traded companies, they're required to be a member of it. So even though it's just a club, you're required to be a member of it. If you're a member of the club, you have to follow the rules, or else they kick you out of the club. And if they kick you out of the club, you can't do audits of publicly traded companies. So while it seems like, gee, who cares what these people do? They're actually very influential, and it doesn't. They have quite a bit of influence over a lot of things. One of the things they do is they make the CPA exam. Okay, so the AICPA makes the CPA exam. I should say makes a CPA exam, and you say, well, who cares? Well, here's why you care, because every single state uses the AICPA's exam to license CPAs. So the AICPA makes the CPA exam. Every single state uses that CPA exam to license CPAs. They don't have to. The state of Illinois could wake up tomorrow and say, oh, we want to make our own exam for the CPAs. We don't want to use theirs, we'll make our own. They don't. Oh, am I a member of the AICPA? No, I'm not. I was. It's like $400 a year, and I'll tell you why I stopped. The school I was at was Robert Morris University. They were paying for it, and they were going through financial difficulty, and I was like, well, I don't know if I should have them paying for it, because quite honestly, I don't do that. I didn't do that much with them. But yeah, I can join the AICPA, and I thought about it, and I might join them again. But I felt bad that I really wasn't doing much with it, and that they were, and the school I was at was paying for it, which was, $400 isn't a crazy amount for a school to pay, but at the same time, when you get, students are struggling for tuition, and that to have this membership that they were paying for, and I could probably just pay for it myself, but again, I didn't do that much with them. So, but I might start up again. I thought about it. I was as a member of the AICPA for like 12 years, something like that. And again, they welcome you back. If you're a licensed CPA, they say, yeah, just fill out the form, send us a check, and you're back in. We're just happy. That sounds very good. You guys hear that? Give me one second here. Sorry about that. My furnace started making a weird sound. I'm in the basement. So anyway, yeah, so the AICPA, though, it's a good group. And one of the things why people join it is because you do get a lot of things like at a discount, for instance, getting continuing education, things that are required for your license. Getting those at a discount, and you know, $400 seems like a lot, but you actually, if you use it, yeah, it can actually save you money. Okay, state boards of accountancy. These are the groups that issue CPA licenses. These are the only groups that can revoke CPA licenses. So every state will have a state board of accountancy. They're the one that issues CPA licenses. And they're the ones that can revoke it. So notice that the AICPA makes the CPA exam. The AICPA does not license CPAs. They're not a state. So, you know, so the question, you know, so, you know, it's good to keep those separate, that the AICPA cannot take your license away. They make the CPA exam, the states use it to license you, kind of like a driver's license. You know, can the Boy Scouts take your driver's license away? No, it's just a club, and no, they can't take my license away, driver's license away. Same thing. The state issues the license, the state's the only one that can take it away. Again, they use the AICPA's exam, but they don't, the AICPA does not have any jurisdiction to do that. It's not a government agency. Okay. Securities and Exchange Commission. We have to talk about two different groups. Issuers. This is how they, I think non-issuers is one word actually. Issuers are publicly traded companies. Non-issuers, I think this is a word actually. I see it written this way all the time. Okay, non-issuers are privately held companies. Or businesses, maybe is a better way to put it. The Securities and Exchange Commission Okay, so the Securities and Exchange Commission only regulates issuers. So only publicly traded companies. And again, that's a term that the AICPA, I think it's only used by the AICPA, to be honest with you, issuers and non-issuers. They are, so only issuers, only publicly traded companies are regulated by the Securities and Exchange Commission. So IBM, they have to follow the SEC's rules. So the SEC, the Securities and Exchange Commission, they make the rules. If you're publicly traded, like IBM is, you have to follow the rules. They have control over you. You have to follow the Securities and Exchange Commission's rules. Now, if I have a private business that's not publicly traded, let's say that I own a restaurant, the Securities and Exchange Commission has no power over privately held businesses. You can keep your books however you want. You can do, you can do whatever you want. And not exactly true, but they have no power over you. They have no power to regulate you. So Securities and Exchange Commission is only for what the AICPA calls issuers, which are publicly traded companies. Non-issuers, privately held companies, are not regulated by the Securities and Exchange Commission. They have absolutely no power over them. And same thing with the Public Accounting Oversight Board. This was this is under the SEC. And they only regulate issuers. The Public Company Accounting Oversight Board, this came out of the Sarbanes-Oxley. Oxley. I don't think I'm spelling it correctly. I am spelling it correctly. See, I should have doubted myself. Oops. Sarbanes-Oxley Act. The Sarbanes-Oxley Act is a funny kind of thing that happened in the United States. They had, I don't know if you guys know the story or not, but there was a company called Enron. You had heard about that in other classes. Enron was an energy company that had billion-dollar fraud, which was completely unheard of at the time. This is around 2000 or something like that. So they had this billion-dollar fraud. Now, big frauds before Enron were $50 million. $50 million fraud, or $60 million or whatever. This was $1 billion fraud, and it hit like a rock. And the largest CPA firm in the United States and maybe the world was Arthur Andersen. They were the ones that did the audit. And everyone wanted Arthur Andersen's name on their audit reports until Enron hit. When Enron hit, nobody wanted Arthur Andersen. It sunk the largest CPA firm in the United States and maybe the world. And it did it in about a year. So it was this huge thing, and people were just panicking because how did a $1 billion fraud happen? Insane. It kind of calmed down a little bit, and then there was a company called WorldCom, and WorldCom had, I think it's close to a $2 billion fraud about a year later, and then the markets went into a tailspin because no one believed the financial statements. It was a credibility issue that we were just talking about earlier, credibility. no one believed the financial statements. Well, how can we believe them? There's billion-dollar frauds. And if there's billion-dollar frauds, that tells you there's probably a lot more frauds, you know, and the markets were in turmoil because of it. So what they did is there was a Sarbanes-Oxley Act that was hanging around Congress for like 10 years. It was about corporate responsibility, and no one paid any attention to it. All the large businesses and so forth got it, you know, it was laughable. It was never going to get passed at all. All of a sudden they were desperate for something. So they said, okay, pass this, you know, pass the Sarbanes-Oxley Act, because we have to get people believing in us again. So that act came through out of desperation, and it created the PCA, what they call the PCAOB, the Public Company Accounting Oversight Board, which is what we're just looking at. And this is sort of like the group, it's a group that makes all the auditing standards for companies, and they also kind of rule what companies can do and what they can't do. Okay. We'll do some of these little questions here, and then we'll call it a night. All right. Which of the following organizations can license certified public accountants?
B.
Yep. Which of the following can revoke certified public accountants?
C.
Yep. So you're licensed by the state. The CPA exam is made by the ICPA, but the states are the ones who can license it. The states are the ones who can take it back. And you might say, well, what about, you know, Securities and Exchange Commission, the Public Company Accounting Oversight Board? They're very powerful groups. Why, you know, can they? Nope. They didn't issue the license. Only those groups that issue the license can actually revoke them. You can grant the license, and only they can only the ones that can revoke them. So the states are the only ones that can do that. And we'll stop here. Okay, we'll say stop. Okay, well, what I'd like to do is kind of go through so the assignment and due dates here. So the beginning of the semester information and quiz, that was the first thing we did. That was this thing. You know, the little quiz at the end of the beginning of the semester thing. So turn that in, you'll get grade for it. Just, you know, somehow indicate these down here, you really underline them or something, or just put in A or whatever it is. Or if you did it by hand, just take a picture of your notebook or whatever you wrote it on, you know, 1 through 7. And whichever ones you chose, you take a picture of that. And then you're going to submit them in here. You know, come in here, and it's due Friday. Yeah, it's due Friday, January 28th. And you can write the submission, or you can just you know, save your file and attach it to it. So, and you hit submit. Don't hit save draft. Save draft kind of puts it in a limbo that it looks like you've submitted it, but you haven't. Hit submit. And in this class, at least, it's not going to matter, because remember, if you submit it and it's not exactly what you wanted it to be, you can resubmit it. So don't worry about, gee, I submitted the wrong thing, or it wasn't complete, I forgot to do page 3 or whatever. If you submit it, that's fine, and you can always resubmit it in this class. Any question on that? Okay, well, let's call it a day then. Nothing due for next week, for next week, we'll probably finish up chapter 1 and 2 handout, and I'll give you some CPA questions for chapters 1 and 2. Things that you think get you introduced to kind of the way CPA questions are worded. They're kind of quirky. Which book we need for class? It's the same one. It's the where am I? So the book for class is this. It does not have to be the online book. You guys can't see it. I'm so sorry. I'm out of practice here. If you go to the syllabus, the textbook course material. So this is the book that it's the 22nd edition. I'm sure there's different. The ISBN numbers might not be exactly like this, but it should be. These are the two people, and it should be the 22nd edition. And again, any form is fine. So if you want to get it in a hardcover, if you want to get it in a PDF form, EBook, any way you want to do it is fine with me. It's a really good book. Go ahead.
Sorry, is there just a textbook that we'll need, or is there like a code that we would have to purchase to do our homework through?
You do not need to purchase a code. You do not need the code.
Okay.
Yeah.
All right, thank you.
And part of it, this class is almost all essays and stuff like that. I mean, it really is not. Basically, when you, for this class, if you do the use the materials like the codes and all that, to get in and have it, they give you a blank spot and you type in the answer. There's no reason to have that really. So, yeah. But anyway, yeah. So you do not need the code for the class to go over stuff. And again, if you want to get the book, if you're planning on going into taking the next 433, if you want to just buy the book like a hardcover copy of the book or a loose leaf cover thing of it, or even there's some place out there that sell I think they're valid PDFs of the book. So anyway, it is possible to get whatever form you want to do it in, it's fine. But it is a really good book, and again, the authors of it are the same ones that do the Gleim. Wait, is it Gleim or is it Wiley? I'm doubting myself. Maybe it's the Wiley book. But anyway, they do a CPA review, and the book is set up very much like the CPA exam, and it's very much like what you'll see when you study for the CPA exam, which is why I really like the book. There's a lot of books out there that there's nothing wrong with the way they're showing it, but it's not what you're generally going to see when you sit, take the review for the CPA exam and sit for the exam. So again, it's not that they're saying anything wrong. It's just that it's a different kind of a format. Yeah, the codes are expensive, and I think you can get the codes a lot cheaper if you go through the publisher themselves. I'm not positive on that, but I want to say the codes are a couple $100 if you go through the school, and maybe 130 or something if you go through the publisher. I'm not positive on those numbers, but a lot of times you get the codes less expensively by going through other groups. Question like that? And again, it doesn't matter to me which one you use, and you do not need the code to enter your assignments or anything like that. And quite honestly, when you enter the assignments, if you look at the actual questions in the thing, they're mostly blank spaces that you type in your answer, which you could do that on anything. You could do that in a Word document or write it out on notebook paper, or whatever. Yeah, question. Okay. Well, we'll meet up again next week. Yeah, so nothing is due next week. We'll keep going on chapter 1. We're going to go a little bit slowly on chapters 1 and 2. Maybe we should finish up by next week, though. And then we'll kind of start into the real kind of nitty-gritty stuff, the ethics stuff, which is chapter 3. Not next week, obviously, but the week after, probably around week 3. Any questions? If you guys have any questions about anything, the next class first, you're going to talk about what's on the CPA exam. I don't know if you guys have gone over that in your classes. We can, talk about any number of things you have questions on. So, and that's part of the reason why I like to do these kind of lectures is that I think that it's the things you're into. It's what things you're interested in or things that don't make sense or whatever you want to talk about. So, okay, I will. Talk to you guys next week.
All right, thank
Thank
you.
you.
Have a good night.
Very good.